Ladies and gentlemen, welcome to the Above the Bar podcast, where each week we belly up to the bar with a new guest, find out what they do, who they are, and what makes them great. So sit back, relax, and enjoy. Alrighty, folks, welcome back to the Above the Bar podcast. It's your host, Sean. We are bellying up to the bar with what I think is a conversation that we all should be having. Someone should be having with you. If you're not having it with your kids because you're scared that you don't know what you're talking about, this is probably the show you want to tune into, you want to pay attention to. This is going to be in your wheelhouse of things that you're going to need to know. We've brought in I love this, founder and CEO. Like that just, as I don't know if it can, but he spelled his name wrong. So we'll talk to him. His name is spelled Scene. Mine spelled Shawan. Just keep that in mind. We brought with us the CEO and founder of Ticker.com, Mr. Sean Tepper. You didn't know you were getting applause, did you?
I appreciate that, Sean. Good to be here.
I always keep the applause as undercover before I get to anyone. So we've got Sean on, and we're going to be talking about, how do you invest, about what's on Ticker, what it can do for you, maybe addressing some of the myths that are out there. Well, I'm too old to invest. Well, I'm young enough. I don't need to. Now I've got time. All these different things we're going to get into. But before we get too far into those kind of things and get to those elements, let's go ahead and do some house cleaning here. Some of our basic house cleaning things. First ones first. As always, now I moved the mic for those of you that are watching this live. I've moved the mic, so I might have to swing it to the side for a moment. All right, that's as far as I'm going with it because I don't want to, knowing my luck, my arm will fall off and I'll lose my mic. But sticker and a cause. If you've got something that you're supporting, you've got a cause that you believe in, something that you're trying to get people to say, hey, come look at what I've got, whether it's a charitable organization, whether you're another podcaster and you want to get your podcast out there, or you've got a website, similar to what Sean's got. You've got your own version of something that, hey, you feel like you can teach people some things. We're all about teaching and learning here at the Above the Bar podcast. And we, as we all know, we want to keep this conversation bar top so we can all learn. I learned so much at a bar. I can't begin to tell you. Maybe that's the segment we need is what's something you learned at a bar? I wonder, we'll have to think about that one. I'll throw that one out there, see what other people think. But, you send me that out, and look, you can reach me on Facebook, on my personal page, on the show Facebook page, on the Earplug podcast page, LinkedIn, YouTube, Twitter, Twitch, our TikTok. All of those are the Above the Bar podcast. Make sure that you also, as you're looking for me on those, you follow us on all those pages. Got to follow Sean. You got to follow Sean too, because his is Sean Matthew Tepper on Instagram, and then LinkedIn is just Sean Tepper. Am I saying Tepper? Is it Tepper?
It's Tepper. You nailed it.
I thought it was Tepper. Yeah. So make sure you're reaching out to him on all those locations and following him. But give us a quick follow here. I don't know why my 4-year-old just came running through the studio as he went to go hide. I'm assuming his mother's not far behind him to go find him. Right there. I snitch out a kid in a heartbeat. I will so snitch a kid out in a heartbeat. I got too many of these things. The other side to all this is if you feel like you need to invest in your media, maybe that's where you're having some shortcomings here. Make sure you reach out to Media by Dibs. You can find Dibs on LinkedIn as Andrew Dibble. You can find him on Facebook and Instagram as Media by Dibs, and Dibs is DIBS. Make sure you're reaching out to him, and you mention to him #belly up to the bar, and he's going to give you a 10% discount on your first order with him and a free consultation. Just remember, #belly up to the bar. All right. House cleaning is done. For those of you that are watching us right now, please make sure you share this to all your favorite yard sale sites. Make sure you get kicked off of all those. You didn't want anything anybody else has anyway. You wanted to come hang out with us. So make sure you do all those things. John's out here. What's up, there, brother, man? We're doing good. We teach you how to invest. That way you don't have to worry about finding somewhere to stay when you get here to Albany for International Wrestling Hall of Fame inductions. All right, we're all set up.
Sweet.
You ready to go, Sean?
Let's do this.
Bellied up to the bar. He's got bourbon, folks. We like Sean already.
Yes, I've got a Woodford Reserve ready to go.
So you're a Woodford guy. I'm a heavens at Heaven's Hill. Do you have a cheap bourbon that you love? I gotta ask this real quick. Like
A
a cheap
You
bourbon
know
that you're like
what?
really
I would
love.
go a Jim Beam white label. If
White label
somebody
Jim
had
Beam.
that, I'd like, you know what?
You're
I'll
good with
do
that.
that. Yeah,
You're
I'll
good.
run with that. If that's all they have, I'd do that.
You know,
Yeah.
so I learned something recently. So I like bourbon, and it never paid attention to what but I always knew what my grandmother drank though. My grandmother drank Old Granddad. I never realized Old Granddad was a bourbon. I always thought it was a whiskey.
Interesting. Yeah, never had it.
That is some rock good ass shit. Um, me person,
Imagine.
me personally, my cheap go to bourbon, and people think I'm crazy when I tell them this until they've had it. Walking Dead bourbon.
Never had it. Where's is it in
You,
Kentucky?
it is a Kentucky bourbon.
Okay.
You can buy it at around here. You can find it at most distillers. It's not expensive. It's like $25 for a bottle, and I promise you, Sean, it is one of the smoothest bourbons I've ever had.
No kidding.
And then we were going to talk a little bit of bar because why not? We're at a bar, but
Right.
we're going to do this, but we're going to get into it now. Like I love the concept of your site.
No, thank you.
The idea, and let's make sure I've got it right. So it's an educational platform, so,
Mhm.
and it's ticker.com for those of you that are watching us live. You can see it scrolling across the bottom there, and it's
Nice.
TYKR. So ticker is TYKR.com. So it's an educational platform, but it's also is it investment strategy or explain
It's
to me the difference?
Yeah, I'll give you the difference here. So it's a screener, so it analyzes stocks for you. So it determines what's a good investment and what's bad, but it also teaches you how to invest along the way. This is a miss a lot of these platforms out there have is they'll show you ratings and whatnot, but they don't really give you the why or explain. And we're really big about, I mean, I'm a bourbon drinker here. Like, we're going to keep things in simple terms. We're not going to use like $20 finance terms, acronyms you don't know. Like, we keep all that BS out of the equation.
Oh, that's so great. And it's funny you said that the acronyms. I started off
Right?
with E-Trade,
Mm-hmm.
which is interesting to me that it's now Morgan Stanley,
Right. Yeah. Morgan Stanley bought them. Yep.
which is interesting to me. So, am I really on this independent platform that's helping me, or did I just get sucked into one of these mega corps also?
No, it happens. Yeah.
But one of the things that I ran into was exactly that, which is I kept having to Google terms when I started investing because I didn't know
Mm-hmm.
what they were talking about. So
Right.
how do you break that down for somebody so that they don't feel like they're lost when they initially so let's start at maybe that let me roll it back for a second. I
Sure.
I find Ticker. What what am I looking for? I'm a new investor. I'm getting into this. What am I going to get out of it?
We can go into that a little bit. What might be a fun story and kind of a relatable story. Should I give the background and how we
Yes,
got
please.
here? All
Absolutely.
right. Yeah, then we can dive into the platform. The simplest, it is actually pretty easy to use, but my background is 15 years in software engineering. I had a small business from like 2006 to 2010, building websites and doing consulting for small and mid-sized businesses. That was through the recession. That was a really, really tough time period. Didn't
Oh
make
yeah.
any money, but got to work with a lot of businesses, which was training I didn't realize at the time. It allowed me to kind of analyze what's a scalable business and what's not. We worked with manufacturing and tech startups and everything in between. And we did grow in the last year a little bit. 2010, we went through a merger. It wasn't one of these things where, hey, you go through a merger and somebody writes you a check for $1 million and you're riding off to the sunset. Yeah, right. Like, here we go, baby. It was none of that. It's a service business, and this is one thing to keep in mind. Service businesses there's not a big multiple on the sale, so we didn't get that check, but we had all debts and liabilities wiped out, which was
Oh
like a
nice.
clean, right, like a clean slate. Okay, so don't go do that business again. And I knew at that point what kind of business I wanted to create. I wanted to create a SaaS, which is what Ticker is, a software as a service. What Zoom is, or what you're using here, StreamYard, it's a SaaS tool.
Okay.
MailChimp is the same thing. Any kind of subscription tool. And I'm like, that's what I got to create. But I didn't have an idea. So I just started working for large corporations. The last, now it's 12 years or close to. I work for GE. I've done some work with Kohler in project management, which is really good experience on how big businesses run. But what I did along the way is I knew in 2010 after that merger, I'm like, I've got to find a way to create some wealth. So I got to start investing, right? My path was a little different. I started with what's called angel investing. There's nothing glamorous about it. It's
I've heard the
investing in,
term.
yeah, the difference is there's stock investing, and angel investing is investing in private businesses. So my theory at the time was, let's invest in some tech startups that I know in the local area. I'm based out of Milwaukee. And maybe as my idea, somebody else's idea, we'll invest in, we'll get in early and watch that baby go 1,000x and go to the moon. Let's just say it's a lot easier said than done. So.
You mean you didn't just like invest one time in one company
Right?
and it was like, I got Google 2.0.
Exactly, the next Netflix or next Facebook. So that did not happen. I made some money, lost some money, but it was like a break even deal after 5 years. I'm like, this is not going to work. I could be at this the next 20 years and swinging for the fence. And I knew, like, okay, if I want to use investing and build wealth, I got to do it the right way. And I turned my attention to, a lot of you are probably familiar with like Warren Buffett, Charlie Munger. Their mentor is Ben Graham. And then another guy by the name of Phil Town. He's not as popular, but he was a big help with Ticker. So I started like YouTube rabbit hole, reading every book I could and analyzing what are they doing to generate really good returns. Because Warren Buffett has said if he had a few $1,000,000, he could make between 15 and 50% per year, which beats the market by a long shot. So the question is, well, I'll take a step back here. Like, this guy is not a gambling man. He's not using emotions, right? He's not using feelings, which means he's using some sort of logic to make decisions. And I knew, like, okay, that logic has to be math. He's starting with math. And that's when I really went hardcore into, like, this was around 2015. I started taking my Excel in the world of software engineering, especially project management. Your best friend is pretty much an Excel sheet. So I'm putting everything together in Excel, and I start taking these equations and start playing with things. And I found a lot of things that don't work, you could say. But thanks to Phil Town, he actually broke things down. He's got 2 books. I'll list them right now. You should definitely write these down. So one is called Rule 1. The other one is called Payback Time. He did write a 3rd book with his daughter, which I'm sure is great too. But those 2 books, Rule 1 and Payback Time, provided a lot of math equations that I use. Like 70% of the math that is in Ticker is actually from him. So I give credit to him.
Give credit where credit is due.
That's right. He's a good man. I actually reached out to him via Twitter and said, hey, check this out when it's live. And he was like, thumbs up, man. Keep at it. So I was
really?
Yeah, he's stoked. Quick segue. I love to get Phil on the podcast at some point. He's a down-to-earth guy. I got to talk about the guy for a second, because the world we live in is filled with a lot of prideful, braggadocious guys with Lamborghinis in their background and private jets. And then you run into Phil Town. This guy drives a Dodge Ram. He's a regular dude. He's probably a bourbon guy, and he loves hanging out with his dogs. Like, he's my type of guy. Like, I will never own or desire to own a Lamborghini, a depreciating piece of junk like that. Come on.
See, you sound like me. Like, I love my truck.
I have a
Nissan Titan Pro 4X, and would I love to drive one of those cars? Sure,
maybe once. Sure,
to be able to say that I was behind the wheel of one. Sure, but past there, I can't imagine. I have no need.
That's it. It's not practical. I drive a Toyota 4Runner. I'm a big outdoorsman, so I like kayaking and mountain biking and fishing and stuff like that. I'm in Wisconsin, so this is where I'm at.
Absolutely. I have friends from Madison and Grafton.
Yeah, there you go.
Look, you talk about sidebar stories. Young dumb Marine. One of my closest friends, still to this day, was getting married to his high school sweetheart. There was a bar across the street from the church in I think we were in Grafton, Wisconsin.
Yes.
There was a bar directly. We're doing shots of apple pucker before the wedding started. The wedding had first time I had ever had a mimosa. I'm telling you, I was like 23, 24.
Sure. Yeah.
I have my first mimosa as we're going down the road in this bus. I just remember waking up in the hotel room the next day. People, y'all in Wisconsin drink like nobody I've ever met.
That's
Like
our
that's a
jam.
special that is a special kind of drinker in Wisconsin. Like you guys,
Yes.
like
Yes.
like I was blacked out. I had so much,
Yeah.
and everybody else was like, and the next day they were ready to go again. I was like I'm holding one eye like I'm a pirate, and they're like, ha, ha, let's drink some more. I'm like,
Put on
okay,
your seatbelt, son. You're about to go for another ride.
yeah, this
You're
was
right.
y'all out in Wisconsin do it on a different level.
Yes.
So I will give you all the credit. But now you're hiding something. You're a little bit of a musician also. So I mean, you got a lot.
Yeah.
You got a very eccentric background there.
I'm all over the place. Like like I've got a PRS and I've got a Gibson here, and I won't go into too much detail, but I listen to a wide variety of music. I love
Awesome.
country. I love rock. I grew up on my parents got me into 70s rock, like, you know,
Nice.
the classics. Peter Frampton, I've seen multiple times live.
Really,
Great.
Frampton. How many copies of Frampton Live do you have?
Oh my gosh, Pink Floyd. It's, and then I love the 80s hair metal. We've got
Gotcha.
Rat and Def Leppard, the whole deal. But my main music genre is actually hard rock and metal. So
That's awesome.
there's a lot of music I listen to, but I've always been a metalhead. It doesn't look like it, but that's my go-to.
I get it.
So
So, and I know that was a little bit of a sidebar for everybody because
yeah, we'll get back to
well,
stock
let's get
now.
back to ticker for a second here. But as the ticker runs along the bottom of this show, and you can see where it says ticker
Mhm.
TYKR.com. Make sure you get over there and check it out and see what it's about. So what was I'm always curious of these conversations. So you went out. This is, and if I was understanding right when we were talking, this is what you do now. This is your business.
This is, I will say that I've been bootstrapping this. So when I started this and launched it, still working full time for a large corporation, and I still do at this moment. I've got two partners in this business. We all have full time jobs. We have about 4,000 customers globally because we're a
Oh
global
wow.
screener. We have, and I'll tell the end of the quick story here in a moment, but just to give a quick segue, where we're at today is we got customers in the US and Canada, but we got a lot of customers all over Europe, some in Africa, but the fastest growing part of the world is actually the South Asia. So we're looking at India, Indonesia, Malaysia, Singapore. There's a lot of people who they're realizing they don't want to follow their parents' footsteps and be working their entire lives. So how do you get ahead of that? Well, number one, get a steady job. All right. And two, start investing, take control in your investing. So it's really exciting to hear that from that part of the world. I think a lot of people in the US are starting to get it now, which is great, especially the younger generations. But there's people all over the world. This is the consensus. They don't want to work till 65.
Right.
Absolutely not. They want to invest. But going back to the quick
Let's
end
go
of the,
back. I was just
yeah,
I was
this
very
is
curious of that.
this
This
is
is
where
such a
things.
fascinating story you've got, Sean. I have to tell you. I
Thank
really,
you.
looking through, and I always love anybody who starts a business. So let's roll back for a second. As you got
Mhm.
your Woodford, I had to
Yeah,
do it.
get my wood for. Oh, good man, good
Had to get
man.
a little heavens to it.
So with the help of Phil Town and of course Charlie Munger, Warren Buffett, Ben Graham, I was able to put this algorithm together in Excel. And what it does is it looks at like 50 data points, and it's nothing fast, like over the top glamorous here, but it looks at about 50 data points from the income statement, cash flow statement, and balance sheet of stocks, which is all the public data you can see. And it's looking at, you guys are going to recognize a lot of this stuff like your revenue or sales, looking at that year over year. Is it increasing year over year? That's what you want to see. Same thing with your net income, which is your profit, your EPS. It's looking at free cash flow. It's looking at debt, like you want lower debt, of course. And it's called the fundamental investing. You're really looking at the fundamentals. There's people who like looking at charts and graphs and whatnot. It's none of that. This is a lot more simple, and it's the tried and true process that Warren Buffett and these guys teach. And I put this together, started making returns between 2016 and 2019. My returns were on average between 15 and 50%. So it's
Oh
beating the market
shit.
every year. And I knew like, okay, maybe I've got my business idea here, because I always wanted to create a SaaS. And just to make sure, this was 2019, I started talking to a lot of retail investors, or like the regular John Does like you and I that do this on their own. And then, of course, some institutional investors, and everybody across the board is like, hey, when are you going to turn this into a software? And that was the green light. I'm like, let's do this. Took about a year to build the first version. We went live in 2020, the summer of 2020. And yeah, so we're at it about a little over 18 months now with 4,000 customers. And I'll say one more thing and then I'll let you ask questions. It's really exciting to see a lot of people are entering the market from all over the world. People are realizing they can get a broker. And here in the States and across the globe, there's a lot of free brokers like Robinhood, and E-Trade is now free. I use TD Ameritrade, which is now free to buy and sell stocks. The barrier to entry has never been easier. You can, right?
Yeah.
You can sign up for one of these platforms in a matter of minutes, and you can connect your bank account and start buying stocks. Now, Ticker, just so you guys know, it's not where you buy and sell. It's not a broker. It is classified as a screener. So it looks at stocks, determine what's good or bad with that algorithm, but it also teaches you along the way. So that's the difference. So if anybody wants to buy a stock, you still need a broker. Again, most of them are free, especially if you're in the States. Elsewhere, there's other brokers that might have a small fee, but it's nothing too dramatic.
Uh, Now, John's got a great question here, and I'll tell you, John is
Mutual
probably
funds.
the best researcher. I know this is the guy like, hey, John, I'm looking to buy a lawn chair. He's the guy that will pull up like
Sure.
spreadsheets and everything. So this is a guy who would love your software and what you've got there because it's got the information. He can pull information. He can look at this data and
Right.
it's right there in front of him. But that's a great question. Can you use this for
Yep.
mutual funds?
So right now, Ticker only analyzes stocks. We will be analyzing ETFs soon. And just a quick, so people
ETFs,
know.
what's that mean?
Yep, that's where I was going. I'll quickly explain the difference. So you have index funds, you have mutual funds, and you have ETFs. They're very close to the same thing. Mutual funds will have a higher cost just to own them. You may know that, John. But there's a lot of active movement in and out, meaning the mutual fund company is moving stocks in, moving them out, rebalancing. There's a lot more activity. So that's why there's a higher expense. Index funds and ETFs are very similar. They're like mutual funds, they're a bundle of stocks. It could be 100 stocks, it could be 500 or whatever. The difference is ETFs, exchange traded funds, you can buy them midday and get the price you buy midday. Whereas index funds, if you buy them at, let's say, 1 p.m., you're going to get the price at the end of the day. Like let's say you buy it at, we'll use nice round numbers like $10.50, but at 4 p.m. or whatever, it changes to $11.50. That's the price you get it at. So ETFs are midday. But what we'll do is, the reason we'll get ETFs and not mutual funds is because mutual funds they're owned by the mutual fund company, whereas ETFs, they're more public. So we'll get, like, let's say it's 100 stocks. They'll all funnel in as the ETF, and our algorithm will analyze each and every stock within and then average out the weight. What I recommend, if you were to use Ticker with your mutual fund, look at the top 10 holdings in your mutual fund, because those are usually the majority of the weight. After that, they're very small percentages, but you go look at the top 10 holdings and get an idea of what that mutual fund, the strength of that is.
So you can actually just go into the mutual fund, see what their top 10, where they have most of their money invested at, and then take a look through Ticker, and Ticker will tell you, hey, these are strong. These aren't so strong as comparably. So I guess one of my questions, and I don't know if this makes sense or this is the right spot for it, but what's a hedge fund then?
Okay, so you've got wealth management companies, and you've got financial advisors, and you've got hedge funds. So a financial advisor is going to probably get you into products that could be, it could be a mutual fund, it could be an index funds, but then they'll also sell you life insurance and annuities, and a lot of, they pretty much cover the wide spectrum of financial products. And they really are specific to being You could call it a fiduciary. So their main responsibility is to really look out for the best interests of you. They're not looking to get you the biggest returns, but they're really looking to protect the downside. A wealth manager is going to be a little more focused on, building your wealth, but they're still most likely going to go into mutual funds, index funds, and ETFs, bundled products. They're usually not going into individual stocks. A hedge fund, now here's the difference. A hedge fund, you have to be an accredited investor to invest in a hedge fund, which means if you're single, your income has to be 200K or higher in the US or more, or you need to have a net worth of 1 million or more, excluding your home. Now, hedge funds, they don't abide by the same rules. They don't have to as a wealth manager or financial advisor. They can invest in real estate. They can invest in private businesses. They can really invest in anything. But when you invest in them, you're signing a contract that you probably won't see the money you're giving them. Let's say it's a minimum investment of 50K or 100K. Probably not going to see it for the next 3, 5, 7 years. You got to have that expectation. You're separating yourself from that money. Whereas a financial advisor, you probably invest with them, and 2 weeks later, be like, you know what? I don't want to work with you anymore. I'll take my money back. Hedge
So,
funds, that's the rule. Yeah.
so the average person, the majority of us, we're going to be with a financial advisor
Yeah.
or wealth manager. Like I have a wealth management person, Mike Latuna,
Sure.
And Mike does very well for me.
Mm-hmm.
So that's what I have. But I do like you do. I'm a buddy of mine, James, advised me $150. I put $150 a month into E-Trade.
Sure. Yep.
And that's what I buy with.
Yep.
Now John had another question. He goes,
Good question. Yep.
do you have a list of top 50 performing stocks? Like if I went on the ticker.
We do. So we have 30,000 stocks on the platform today. And when you land on the stocks page, you can filter and sort by whatever dynamic you want. So I'll keep it really simple here. So we have a scoring system. Right now, our point system is 0 to 20, 20 being the highest score. We're moving to a 100-point system very soon here with our new platform, just because we found that around the globe, 20 is a little obscure, but 100 points, everybody across the board is like, oh, it feels like, yeah, right.
It's only the Dungeons and Dragons guys that understand the 20-sided die. Like, oh, natural 20.
There we go.
Critical. It made a crit. You critted it. It was a natural 20.
I think of Stranger Things as soon as you say Dungeons and Dragons.
There you go.
Yes.
Perfect. Which is getting ready to come back.
Yes, season 4. Cannot wait. But John, a good question here is you can sort by score. We also have we use the margin of safety as well, which Ben Graham has been a teacher of that, and of course that was passed to Warren Buffett, Charlie Munger, Phil Town. You can sort by margin of safety, which is essentially the share price discount off the sticker price or fair value or intrinsic value. So in other words, we'll use some simple math here. Let's say a stock is at $100 share price, but its intrinsic value or fair value is $200. That's a 50% discount. And these guys have taught us, Warren Buffett uses the quote, you want to be buying $10 bills for $5. And I like using an analogy. I like going into the grocery store. I'm a food guy. I'm a foodie. I like going grabbing a gallon of milk that's worth $5, but it's got a little discount there that says I can get it for $2.50 right now. I'm like, there we go. You buy things that are 50% off. And we do that with stocks as well. So you can filter by that. You can filter by anything, country, whatever exchange you want. We'll be adding a bunch of cool filters in there, like highs and lows of the week, all kinds of variables. And then you can export. We'll be adding a feature where you can export data to CSV or Excel. So,
John said, buy them on sale.
Buy them on sale. That's right. That's right.
And now Nate brought up a great question, and this is kind of a broader investment question, but I think it, I always remember this saying, and who was it? It was actually, God, I can't think of his name. It said, buy land God isn't making anymore. God,
yes.
Do you remember they used to come when you went to the movie theater? They would come around and collect. Did they do that at your movie theaters where you grew up in Wisconsin? Before the movie would start, they would collect change for like, in Baltimore, they used to do that all the time where I grew up. They would run this ad, and then they would come through and almost like passing the collection plate. They would pass it around.
Yeah, sure.
Say, okay, hey, look, we're collecting for this, but it was buy land God isn't making anymore. But this is a great statement.
That's a good
What
question.
makes more sense, investing in stocks or, and I'm going to tell you my opinion after you give your answer,
Yep.
buying land.
So I want to include one more category in that, and that's real estate. So we've got real estate, land, and stocks. So I will say this, and this
Now,
was
why did you just
motivating.
separate real estate and land?
I'll get into that in a
Okay.
second. Yeah. So Phil Town did mention that again. One of the mentors I really respect. He sold off his real estate long ago because the returns you get in the stock market are significantly greater. Yes, real estate is great for producing residual cash flow because from renters, but you make much bigger returns, especially when you start getting like a financial advisor, wealth manager, get you about 6 to 8%, maybe 10%. But when you start getting into some serious consistent percentages like 15, 20, 25, and you start looking at that on like a calculator, and we have one on our site, you can go to our download section, you can get it for free, that after 10 years or 20 years, what does 15%, what does 25% look like with just a $10,000 investment? It's ridiculous. It's millions of dollars. I'll put it that way. Just based on those percentages. Now with real estate and land, I like real estate, and I've got a podcast called Payback Time. I like bringing people on who are a wide variety of investors. There's a lot of people that have been on that are into real estate. It's a lot of maintenance. It's a lot of fixing toilets and repairing electricity and whatnot. You can hire a property management company, which cuts into your profit margins. The category that's rare is land. Now with land, I did interview a guy that talked about that. The way you make money is you got to find the right area, and it's really hard to find something at the right time. Like let's say you're like I'm in the suburbs of Milwaukee and they're starting to grow, and they're adding gas stations to corners. You want to think about corner property, something that's going to sell fast. And fast, we're talking between in 1 and 3 years. Then you can buy it low and sell high and make a nice premium. In most cases, though, people are going to buy land and they could be sitting for decades. That's a problem for me because that's massive opportunity cost, meaning you could be invested in businesses in the stock market and making some serious returns year over year. So that's the expectation you got to set. If you buy land, it depends where it's at. You could be sitting on it a long time. The payout could be nice, but I like a sure thing. So I focus on stocks. I don't get into land.
And my thoughts are like, I love exactly what you're saying. Buy it, own it, sell it off to somebody else quickly because you have the vision for it. I don't want to hold on to it.
No.
And the other side with land or real estate is you always got to keep paying Uncle Sam.
Yes.
You never really own it.
Yes.
He's always got his hands out. He's always going to want his cut of it.
Amen.
So remember that when you're getting these things. Nate, I'm going to get to your next question. I just want to pop this up from John. John says, great show, guys. We'll definitely check out your website. And remember, the website is tyker.com, TYKR.com. Real estate is great. Rent, write-offs, appreciation. John and I were on the railroad together. He is probably one of the smartest guys I know on the railroad.
That's
railroad
awesome.
pension. It's also considered investment income for us. Stay diverse. Use those rents to invest in stocks. That's actually a great point. Use that residual income to then buy stock and keep it. That's actually, if as he says that, and I'm thinking about it from a diversifying standpoint, buy the properties, have the rentals, do those things, but don't sit there and just because what is a savings account now? 0.5%?
Yeah, 0.05.
Is it 0.05? Like I don't
it's
even
got
know.
a zero in there. Yeah.
Yeah, like it's nothing when it comes to your savings account. So make sure that you're putting that money. I remember when CDs were the thing, like, hey, get that money in a CD, it's worth it now, unless I don't know anybody who owns CDs. I had some back in the day, but I don't know anybody who does that anymore.
Yeah. No, I got a comment on your point there, John, is there are people I've talked to that are into real estate investing. Let's say they have 2 properties or 4, they'll take half of the properties and they'll use the income from those and they won't pay themselves. They'll go directly into stocks. So it's
Oh,
fuel for their investment account. That's just over and over. And I really like that strategy. So they've got enough income they can pay themselves, but also to funnel their investment
that
strategy.
that
Yeah.
that's smart. And my father used to. We owned a lot of real estate. And my dad always kept my name on it, kind of like, hey, paying it forward to his kids.
Mm-hmm.
But his thing was always buy a house,
Mm-hmm.
pay for it outright,
Yep.
pull all the equity out of it, buy the next one,
Yep.
pull all the equity out of it, buy the next one. So you never actually owe one but one piece of property, because the
Right.
equity from the other ones you keep pulling it out to buy the next one, and then that one's paid off, and then you keep constantly paying off each property. That was my dad's
Mm-hmm.
thing. Now, John,
Not
now
bad.
Nate's got a great question,
Yeah.
and I've looked into this before, and people are always like, buy gold, buy silver. It's not as easy from an investment standpoint to just go out and say, well, I'm going to go on a stock exchange and I'm going to buy gold, because there'll be a
Right.
thing that just says GOLD, or because it's three letters,
Mm-hmm.
GLD or SLV. It's not that easy. What are your thoughts on when people say, well, I'm going to buy precious metals, and I'll say precious metals more than I just say
Thank you.
gold or
Yep.
silver, buy precious metals over individual products or services that a company may be providing?
I love this question. So I don't get into precious metals. The reason is precious metals don't produce a ongoing product or service. They don't have an income statement, they don't have a cash flow statement, and they don't have a balance sheet. I really like businesses, and this is why Ticker works, is because we're analyzing that fundamental data. We can't look at gold and be like, hey, this piece of metal is worth this, because there's none of that within. So with that, it's kind of like we will be adding, just full transparency here, we will be adding crypto to Ticker in the near
Oh,
future.
really?
But the catch is we set expectations with everybody. You can't analyze where crypto is going either, because like gold or silver, there's no income statement, cash flow statement, or balance sheet. So when you get in, you don't know where it's going. With a business, based on Ticker, you have a really high probability. If it's on sale, it's green, it is definitely going up over time. If it's red or overpriced, it's definitely going down, because here's how it works. Every quarter, there's quarterly statements, there's earnings reports. Every business has a report. It's by law around the world. You can't just skip one. And every time it comes out, there's the main variable that they're looking for is EPS. There's
What is EPS?
EPS is earnings per share. So that's your net income divided by the outstanding shares. And that net income is extremely important. And what they're looking for is, let's say, we'll just use some simple round numbers here. Let's say the next earnings report is, it's April here as of the recording of the podcast. Let's say it's May 15th. We have a stock that is expected to be $1 EPS. And when that earnings report comes out, everybody's waiting. And as soon as it comes out, if it's like a $1.05 or $1.10 or $1.15, that is a green light, where large institutions, these are the ones that move the market the most. Large institutions like, oh, financials are checking out. This is a safe business. They're financially strong. Guess what? We're buying more. And what happens next? The share price goes up. The opposite happens when EPS comes out. It's like, okay, we expect it to be $1, and all of a sudden it comes in at 90 cents. Guess what happens next? In most cases, yep, it goes
My
down.
whistle sucked right there.
it's
I was
it's
trying
going
to
to
I was trying
nosedive.
to give it I was trying to give it one, and I was like, oh, that sucked.
Right. Now, it doesn't happen all the time. I know we've had a volatile 3 to 6 months recently. So some stocks, they've been coming out with great financials, and guess what? They dive. And we can talk about that. That's the number one strategy of building wealth, is buying great businesses as they fall. That's where you make your biggest returns. But anyway, with gold and silver and even crypto, you just don't know. We will be teaching people. This is full transparency. We're creating a new onboarding sequence that teaches you about what to invest in, what not to invest in. If you do invest in this, just be careful. With crypto, try to go 5% or less of your net worth in that asset class, just because it's risky. You can be in
Crazy.
it, right? But you can't calculate where it's going.
I mean, gosh, look at Bitcoin, and I can still remember
Yeah.
watching. It was either like I like CBS Saturday Morning and CBS Sunday Morning. I
Sure.
always watch that. I enjoy those. And I remember them talking about Bitcoin, and they were at like back when everybody went to Starbucks for like the internet. Remember
Yes.
they were like internet cafes were a thing. Um,
Yes.
and they were at one with some big hacker guy, and he's like, "No, you can't hack this thing. You're never going to be able to hack it because
Yeah.
of the blockchain." And he went over it, and they were $8 a share. A year
Mm,
ago, it was 60 some $1,000 for one coin,
right.
which sounds amazing. And even saying right now it's $46,000 a coin,
Hmm.
but that is a huge swing
It
for
is.
a correct. That like I have I kid you not, I put $200 into coin. I have about 245 out of it right now.
Sure.
I'm perfectly fine with that. And we put like when people give us money for our youngest son, the one that was running around here,
Hmm.
we'll put his money into that because the
Sure.
thought is it's worth it for him as
Hmm.
those things go up. Eventually, time will tell, and it's not going
Hmm.
to hurt his money. Uh, it's very interesting hearing all these investment strategies. This is the other side. What would you say to a parent who's out there going like me? I make
Hmm.
this very clear to everyone. I don't pay for my kids' college. 0.0.
I like it.
Uh, my
Yep.
thoughts are I'm not by the time you get to college, I'm close to retiring. I'm not blowing my wad
No.
to
No.
to to end up living having to work longer in my life for you. John, John just start mining. John, I got a buddy who has like two of those machines. He's got two of those machines and
Yes.
makes like $30 a day off of
Yes.
it. But that's a whole thing in and of
Hmm.
itself. Um, but I won't pay for it.
No.
What are some of the things that, and some people might say, oh, that's horrible. They're your children. Look, I'm sorry,
Nope.
folks. You worked your life off so you can retire. Do you want to take on $100,000 debt that you're never going to see a return on so
No.
your kid can sit in the basement of your house? I'm sorry, it's not happening. What do you
Yeah.
tell parents that because what's the plan? It's a 50 something
What is it? A 509 or some
509. That's it.
account? Yeah.
509. Like you can get a 509 and put money in that. What
Nope.
do you tell parents that are like, hey, I want to start putting some money away for my
Mhm.
kids, but I want it to grow organically?
Yes. Okay. So before I really get into that, I will say your kids may not need to go to college because blue collar jobs are actually paying a lot more than white collar jobs now. Like
This is my niece said
529.
529. My niece said
Yes,
529.
there it is. Thank you, Ellie.
Um,
Um, yeah, so right, like they may not need to. I actually tell people these days don't. Even kids graduating today, I tell them like, okay, what do you want to go to school for? And if you're not going to school for engineering or finance
or doctor.
or doctor, right? Like, and even that, I'm still you got a long opportunity cost situation where you're not going to be until your 40s until you're making a profit in some cases, in your net profit of your own net worth. It's
Amen.
like I know people who are tech school 2 years coming out making 60 80 100K a year. I just watched a CNBC video of a kid that was making 200 grand a year doing tech for like I think windmill company, making 200K, and he's like, I could go to school, come out of school, make 200K, or I could skip college completely, make 200K. Now I was real impressed. I think you guys could Google it on CNBC, but I've got a buddy of mine. Get this, he's my friend's younger brother. He's 18 years old, worked through high school, saved up enough money to put a down payment on the house, bought a house. He's making $1,000 a month on that. And then he researched what tech stacks or what tech platforms are in high demand today. He found out Salesforce is really hot, started researching Salesforce on his own, applied to a Salesforce.
Oh, oh no, Sean froze. Sean, you froze on me. I don't know. Am I the only one that's moving? No.
There.
Somebody somebody tell me if they're getting this. I think Sean's frozen. Sean, you froze there for a second. I
Am I
heard
back?
yep, I heard
Yeah.
research Salesforce and then you
Yeah. So with this buddy of mine, he researched Salesforce and he got a Salesforce development job. He's 18 years old, making 60K a year. He also has in a rental property. It's like, he's like, Sean, I'm not going to college, and other people are telling me to go. And I told him,
No.
don't.
Look, I have a degree in human resource management. Roll it up real tight and poke yourself in the eye with it.
Yes.
It's great for me because my mother never went to college. My father never went to college. It's nice to say I have it.
Yeah.
The Marine Corps paid for it. John just made a comment. He says, sign them for the Marines, free education. My two of my four sons, one went in the Coast Guard. Unfortunately, the way the GI Bills work, it's the stupidest thing, because my youngest son was born after I got out. I can't give him any of my GI Bill money, which is so stupid. But my other two of my sons have 18 months paid for. They'll have that from me because I don't need it because I've already got my education. Sure. I've already taken care of it. But I'm a firm believer, just like you said, engineers. I want my engineer to go to college.
Yes.
I want my lawyer
State
to go to college.
School. If you go to college, go to the lowest expense as possible. Don't go Ivy League or liberal arts.
They're all the same.
They're all the same. Go, because I know people coming out, no matter if you're Ivy League or top tier 25 school or you're a state school, you're still getting paid roughly the same. Yeah. Go to state school. Try to get as many grants as you can. You can really, if you're smart and you're strategic, you can keep your college expense pretty low.
But I always tell my kids I want them to be plumbers. You can always call a plumber to do electrical work. You cannot call an electrician to do plumbing. Sure. And that's the truth. Your plumber has to know electrical stuff because of the pumps and everything. But we can get into that. That's a whole nother thing.
Yeah. So be direct with your answer, is the 529, I'm sure is a fine product. What I'm hearing, and this is what I support, is get into strong businesses and keep buying more. Every allowance, every birthday, everything, keep buying more strong on sale businesses that are definitely going to be around the next 10 to 20 years. I've got a list of a bunch of them that are definitely going to be around. And to give you a quick testimonial here, is one of my friends. She's about 50 years old. Her father, this was well before Ticker, and he knew enough about Warren Buffett, but he knew enough that say, buy businesses that are strong businesses, popular brands are going to be around for a long, long time. And he told his daughter, buy Apple, keep buying Apple. It's going to be around for a while. She started doing this, I think, around through the 2000s. Well, now 2022, at 50 years old, her Apple stock on its own is just about $1 million. Yeah.
Couldn't even imagine.
Just that holding on its own. But she just had the discipline to keep buying it. Every paycheck, she's buying Apple. Every paycheck, buying Apple. Fortunately, Apple in Ticker is on sale. It's well rated. That's a strong business.
That's actually what I only have two stocks. I make no bones about it. I have Apple because my buddy Jimmy, was the one that was like, Sean, buy it. I'm like, it's going down. He's like, buy it. It's going to come back. Yeah. I bought it at 130. It's 170 something as of today.
Nice.
I wish I'd have bought it at 109 when it was at that point, because it had even more money. But I bought that, and because of the area I live in Albany, New York, I buy Plug Power.
Sure. Yeah.
And Plug Power is a weird one I think Plug Power is a show in and of itself, only because it has it's still, I think, holds
I'm heading the ticker right now
to see where it's at. Plug Power has the record for the largest rise and fall of any stock in U.S. history. In one day, it went up to it went from like $20 some to $109, and by the end of the day, it dropped back down. It was like this crazy move. But I believe in this. Buy a little at a time, folks. And that's one of the things I would love to hear your thoughts on this.
Sure.
And Nathan, I'm going to be able to answer. Nathan, I think
natural gas.
Buying natural gas stock would fall under that same bit of buying gold or buying any of those things, just because of the simple fact that when you buy those things, there's not a service associated with it. So it goes with the ebb and flow of seasons, markets, all those type of things. Would that be about right?
Actually, I would say that's a little different than precious metals. The reason is the stock, actually, if it's, I'm thinking of a utility company that produces, they have an income statement, cash flow statement, and balance sheet, then if you were to give one here, Nathan, I could actually look it up, see how it looks.
Give me
But that's
somebody
an
you're thinking
actual,
about. Nate.
yeah, it's actual business you're dealing with
Okay.
here. Yeah, so you might be okay. Now, I will say this: there's people that are thinking about, like, not coal, that's going way back, but let's say gas and oil versus EV. And I always like to bring up the fact, one thing that Warren Buffett and even Phil Town is big on is you got to look at the 4 M's. I'll just go through those. So you got the margin of safety, which is the math part of investing, which Ticker does for us. There's also the meaning, the moat, and the management. The meaning is the business models. They're going to be around in 10 years. The moat is the competitive advantage, is there low competition. You want a business with low competition. And then the last one is really easy. That's the management. And we could go into those if you like. But with a natural gas stock, yes, you kind of want to think about, okay, is this going to be around in the next 10 years? Probably. I look at EV, electronic vehicles are going to be
That's a whole
around.
thing.
That's going to be a lot more popular, right? So where do you want to put your money? That's the question. So might be an option.
There was a couple of those Chinese EV companies that were pretty impressive there for a little bit,
Yeah.
but I think they all kind of fell off all at once. And Derek and I served together in the Marine Corps. We floated together. Uh, Derek, one day I might have to ask you if I remember a tattoo right. I got a feeling I remember a tattoo you have right. But he says, love the show. Wanted you to
Derek.
know that definitely going to check out ticker TYKR.com. He's 46. We served together, like I said, looking to retire in the next 5 years. If a person had a 401k to invest, how would they use the 401k to build passive income? What's your thoughts on that, to build passive income?
Is it 401k or 400k? I
Well,
saw
okay. Well,
there.
he said 400k. I said 401. Is there? I
Mm-hmm.
don't know what a 400k is. What the hell's a 400k?
Well, I'm thinking, Derek, if you could, I think you said you've got, 400k to invest.
Had 400k to invest, not a four. See, that's that number. I'm thinking 401k, and he just typed it wrong. But if they had 400,000 to
I,
invest to
I'm
build passive,
thinking he said
it's a baller
400k.
life.
Yeah.
It's a baller
So
life. Oh no, he
what I
said.
would,
Hey, look, here you go. Bing.
yeah, yeah,
It's a
that's what I
baller.
thought he said. Yeah.
It's a
So, and this
baller.
is this is a common question we got. There's a lot of people who they either been investing in index funds, ETFs, or mutual funds, which is a nice, slow, steady race. But as Phil Town teaches us, is you're really held back because there's a lot of stocks in that same fund that are garbage holding you back. Full transparency here, when I first started creating Ticker, 2016 and 17, I made over 15%. It was about 15, 16%, but I was still holding ETFs. And I'm like, what am I doing here? Like, these are holding me back. And I sold my ETFs, and I said, I'm only doing the Phil Town philosophy. Like Warren Buffett has talked about owning about 10 stocks. I think Ben Graham has talked about like 15, 20, maybe 25 stocks at most, but only invest in the best of the best. The best analogy I have for this is the 1992 Olympics. The Olympic Committee allowed the Olympics to recruit NBA players, and they had thousands of players around the US, around the world to recruit, but they went for what? The top 10 best in the US. And guess what happened at that
They
Olympics?
annihilated everyone.
They won every game by an average of 40 points. It wasn't even fair.
Mm-mm.
And I look at investing in the stock market, you want to put yourself in the same positions. You got a 400K. I would say start small, because your objective first, I will say this, it's not to make money, it's to increase your confidence. Start small, $100 to $1,000, somewhere in there, and then start putting in a little more every month and keep buying safe businesses, good businesses. And when the market's down like it is right now, and it will always go down again, that's when you should be happiest. That's when you should be most excited, because you buy those on sale businesses. This is a stock. This is called stockpiling. This is something Phil Town teaches in his book Payback Time, and it was the mind blowing thing. I'm like, this is unbelievable. When everybody's scared to death, you see those stocks. They have great financials. They're still selling great products, still selling great services. The market is going down. When the market goes down, it pulls everything down. And guess what you do? Like, oh yeah, I'm going in, baby. And you keep buying more, and that's when you make money. So that 400K, I tell you what, you're gonna turn that into a big number in the next 5-10 years. A big number.
Any any one that you would say right now, like this is the undercover brother stock, like nobody's paying attention, like nobody's paying attention, nobody's
Yes,
really
I've
watching.
got those.
And just so you know, my niece, she's all about this. She just passed her Series 6 and doing her Series
Congrats,
7,
Allie.
doing her
Yeah,
Series 7. I think that's what she
yeah,
told me the other day. Doing her
yeah,
Series 7. She's pretty awesome. And
yep.
she's a mom, and she puts up with a husband who was a TSA agent, you know.
That's a
I don't know.
stressful job.
It's a
Yes.
stressful job.
Yeah.
But so what would you, do you have one that you would say, look, this is my
I
tip
do.
right now?
And this is going to be right up your alley because you sounds like you and some of your buddies have a military background. So I will say this, of course, this is not financial advice. Of course,
Right.
do your homework when you go to Ticker, but I'll give you transparency. Ticker is different in this, that if you join Ticker, you get to see my portfolio, all my stocks I hold 10,
Your
and you get
personal.
this, yeah, my personal portfolio and what percentage I hold. I do hold Microsoft, I hold Apple, I hold AMD, I hold Fortinet, which is cybersecurity. But one stock you guys should be paying close attention to is Palantir. So Palantir is a big data analytics company. A lot of their business is they've been around since 2003. They do a lot of work with the U.S. government. They do a lot of work with the U.S. Army, also with the allies. Alex Karp has vocally, and this is where a lot of people are contrarian to the business, is he vocally said that we will not do business with people who are not our allies, the U.S. allies.
PLTR, Palantir Technology,
PLTR, correct.
and they're
Um,
cheap.
they are super cheap. It's what are they at today?
1290 at
Yeah.
closing.
Yeah. There's people talking about, and I fully believe this because data analytics, this is my background, tech. Data analytics is analyzing businesses and how to use the data to optimize your operations, how to use that data to sell more efficiently, to market more efficiently. Data is super critical, and they'll get these government contracts. And the beautiful thing about government contracts, I could go off on a tangent here, but I'll keep it short. Government contracts, you don't just sign up for 6 months or a year and then we're talking 7 to 10 years of reoccurring revenue. You sign a contract with the U.S. Army or the U.S. Marines, you're in it. You're in it for a
Oh yeah,
long time. So
we
they do
know.
business with the government, but they also are growing the public sector, which other large businesses like I think they're working with Shell to help them optimize their business, and it's incredible. I know this is going to be a stock that goes over $100 at some point. As you said, it's
Oh wow,
$12 today. Yeah, that's
that's strong words to say that you feel that much. I'm looking at them.
yeah,
Like even today, they opened at $12.35.
yeah.
They ended at 12.94. I
Mm-hmm.
don't know what all these. Their market cap is 24.89 billion. Shares outstanding 1.93. So yeah, no, that makes perfect. Look, there you go, Derek. And if it works out, then you have to like. I need a
A
hundred
kickback.
thousand for. I need 100K. I need a hundred
Yeah,
K nut off of it, bro.
yeah.
I'm just saying, if you're worth like billions, I need 100K nut off of it.
Real quicker, there's a lot of other, I shouldn't say a lot, but there's other data analytics companies that I paid attention to, like Snowflake, and all these businesses are well over 100. This business is just getting started. And yeah, it's a little contrarian, and not everybody loves Alex because he just says it how it is. He doesn't make people's feelings feel better on conference calls, which there's CEOs that do that. They want to
Oh
say
yes.
things and he's like, this is what we're doing. And if you like it, great. If not, and I like that because that's strong conviction on what your business is doing, and you're not hiding anything.
Well, that's it right there. He's not hiding nothing. And you kind of mentioned it right there. I haven't talked to the gentleman in years. I hope he's still doing well. But one of the first financial people I ever knew, um, he was originally his father was a Sikh. His mother was a English nurse during the Second
Mm-hmm.
World War, and his mother was Jewish, so he was Jewish. he would not. He knew every company that was a Nazi supporter and would not. Not Bank of America.
Yep.
Oh no. Oh no. Like if you were like Bank of
Mm.
America, he'd be like, oh no. No, 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 no.
Mhm.
Uh, John has a question for you. I want to see if you want to answer that. So he says, after the 14-day trial, how much is Ticker?
We got two options. So I think it's $19 a month and then 29. Of course, if you go with the yearly plan, I think we give a 40%
Oh
discount.
wow, 40%. Now that
Yeah.
kind of gets into something you and I were talking about. Do you want
Yeah.
to talk about that now? Do we want to
Sure.
put that out?
Go for it. Yeah.
So, how long is the code good for? What are we going to say?
We've got a free code we're going to give away. It's for life. So you'll never have to subscribe to the
Holy
platform
shit! So
ever.
it's a life code?
Lifetime
Like I didn't even
code.
realize it was a life code. I thought it would be like for a
A
month
year,
or
a
two,
year? No,
like a
no.
year, like a life code.
This
All
is
right,
for life. Yeah.
all right. So we're gonna. Here's what we're gonna do. We're gonna put this. How do we want to? God, Sean, you messed me up here. I was thinking like, to be code for
It's
like a
too
month.
good of a deal. Pull
Like,
back.
holy shit, I'm keeping it for myself.
Sure.
No one gets the deal but me. But okay, so let's throw this out there. So whoever tweets, we'll give it a week. I think a lifetime, that's huge.
Sure. Yeah.
Let's give it a week. So whoever tweets, you gotta tag at the Above the Bar podcast and at Sean Tepper, and that's Tepper. You gotta tag both of us. And then when you put it out there, you got to say, what did we say the hashtag was going to be? It was hashtag bar invest in the
Support your
bar.
local. Yeah, support your local bar.
Yeah,
Was that
I
it?
like that even better.
Yeah. Yeah.
Hashtag support your local bar. If you put that in there and you put that on there, whoever gets the most retweets of that tweet, Sean or
After a
I, one of
week.
us will reach out to you. We'll
Yep.
we'll figure out which one because both of us will see it at that point. We
Yes.
we will reach out to you. Whoever's got the
Yeah.
most retweets of that, and Sean or I will contact you. You're going to get a free code for lifetime access to
Yeah.
ticker.com, TYKR. But the other side to it is 40% discount. Dude, that's huge. So if you figure at $19.99, so
Mhm.
you're talking over 12 months at $20 a month, that's $240. So if you're dropping 40% off of that, so you figure even
Right.
then you're what 160?
160, 170, some there.
Yeah,
Yeah.
I'm trying to do it in my
Per
head real
year.
quick.
Yeah. Yeah.
That's huge, dude. That's
We're
monstrous.
yeah, and thank you for that. What we're trying to do is democratize investing, make it super approachable, make it easy for
Yeah,
everyone. And nobody's doing that, or how we feel they should do it is you got to make it more approachable. There's screeners out there we know of. I'll list them right now and you guys can check them out. Like we say good things about Simply Wall Street. They're based out of Australia, but their logo is a bull in a suit and tie. So they only serve the male audience. And with Ticker, this is one thing we're keen on with our marketing. And Allie, you'd probably appreciate this is we need to serve the female audience. We got to lean into that. There's a lot of women who are getting a lot more involved with the finances of the family and a lot more in investing. There's a platform out there called Elvest, which we're kind of taking inspiration from their onboarding. They primarily serve women. But anyway, it's like there's a lot of people missing the mark. Like you got to make it super easy for everybody. You got to serve men and women. So
absolutely. And I love that. For how long I think you and I are probably in the same roundabout age group based on when you said your parents got you in the 70s rock. I was like,
that's
okay,
right.
we're in the same age group. As soon as you said that, I was like, all right, I know. I mean, if I yelled at my Google right now, you'd be like, I know that song. Uh, but
Raise them right.
growing up, moms were who managed the household.
Homemakers, yes.
I heard a great one the other day talking about investment, just kind of sidebar. The rapper 50 Cent was talking, and he said that his grandfather used to always give his paycheck to his grandmother, who didn't work, but she took care of the house. And he said, I didn't understand why. Why are you giving her your money? And it was, she knows what I make. She manages the house. I'll go to
Mm-hmm.
work. And many women have done that for so long. A platform like this is just amazing. I love it.
Yeah.
I mean, this is great. John's over here. I need a referral code. LOL. I know nothing about tweet. Oh, tweeting.
Tweet.
Tweet. And John spelled tweeting. TWEETEN.
Yes.
John, go see Jimmy Nemeth or go see Keith Bourbon. Or not Keith Bourbon, Keith DeRozier. They'll teach you how to do it. I promise you. One of those two know how to do it. And there'll be angry tweets if it comes from DeRozier, but who gives a shit? That guy's the angriest person I know. He's the only guy I know. Like, you never heard the saying when people, and I don't care, somebody at the railroad will tell him I said this. You ever ran into somebody who's like, people say, like, if that guy won the lottery, he would complain because he had to pay the taxes, had to pay.
Yes.
That's this guy. Like, this is that guy that would be like,
yes,
I won the damn lottery, freaking government. I got to pay him all this.
Gotta give Uncle
Dude, you got
Sam his
$140 million.
Yeah.
Yeah, but I could be 200 million. You still got 140. Yeah, but that damn government. Yeah, he's that guy. So now you got your podcast also, though. So how often does your podcast go out?
I try to release 1 or 2 episodes a week, and I'll give a quick layout here. We try to interview people who are either entrepreneurs or investors to hear how they created their business or how they got started with investing. The investing side is growing slow but sure. We're trying to bring on new people all the time. But yeah, so if there's anybody on the call here, please reach out. If you're just getting started with investing or did start, you can share how you got started, how you invested your first dollar, what stocks you bought, stuff like that would be a lot of fun to hear. But yeah, I always like hearing from entrepreneurs. How did you build your business? Our audience loves hearing stories like that. So payback time. I
got some people I got to introduce you to.
That'd be awesome.
Yeah. We'll share guests. That's the best part about podcasting. You start sharing guests.
Yeah.
You'll have to tell me, Nathan, why he needs to talk to you. It's because Nathan needs money. Nathan just needs money. He's got a bad wrestling habit. He's very big into wrestling. He's got a bad wrestling habit. He needs money.
We talking WWE?
Oh God, bro, you're out in Wisconsin. We'll have to get you out here. If you get a wild hair up your backside, come out here to Albany. The International Professional Wrestling Hall of Fame is in Albany, New York.
Okay.
And it started last year. They're inside of, now it's called the MVP Arena. It used to be called the Times Union Center. The name changed shit. But it's inside of there. And in August, we'll be there in August, but they actually have the Hall of Fame inductions. And Tito Santana's going to be there this year.
Okay.
A bunch of other people. Hands of Stone, Ronnie Garvin was there last year. I don't know if you remember Ronnie Garvin, but like that dude, he was the best because Ronnie Garvin had he just punched dudes. Like he didn't punch dudes. Like he was just this guy went out there looked like the average steel worker and just punched dudes. Oh yeah. Well, Nathan's great about this. We'll talk about this. Nathan's great about booking guests. He has his own podcast.
Okay, cool.
But so kind of we're gonna get ready to close some of this up and get everything ready to so that you can finish your bourbon. I'll finish my bourbon. We'll talk a little bit afterwards. So we've got ticker.com, TYKR.com. You have your show Payback. It's Payback Time, right?
Payback Time, yep.
Payback Time. And they can find that on all the major platforms.
Yeah, we're on LinkedIn, I think on Instagram, Facebook. Yeah.
Okay. So we'll look up Payback Time. Everybody go give that a follow. Go subscribe to ticker.com and get that going. Any piece of advice, like a strong piece of advice, if somebody was out there going I got $100, or even better yet, I can afford $20 a month, what would you tell that person?
Hey,
that's really the new guy.
That is exactly, you nailed it on the head. And it's not about how much you can invest. It's about building confidence. So that's what we tell people is try to get in, invest your first $100 to $1,000 and just start learning, using Ticker, getting more comfortable. And every month we do tell people when your confidence starts increases is start allocating money. Like what I do is I set up an automated payment from my bank account to my broker every month, kind of like I have to pay my mortgage or I have to pay my cell phone bill. That money automatically goes over to your broker account. In my case, it's TD Ameritrade. You get to that point. That's a great place to be. And you can get there relatively quick. But first things first, just get confident. Put your first $100 on. That's it.
That's it. And for me, I will my big piece of advice is don't wait on it.
No,
Diversify.
no.
Look at anything you do that's a nicety. If you think about how many streaming services you have, if you think about if you're
Yes.
if you- if you
Yes.
if you're like Sean, the Sean and Sean show right now,
Hmm.
Scene and Shawan, if
Yeah.
if you're like us, and you enjoy bourbon, well, what does that one bottle cost you? And you really think about those things. Would you like to have that, or would you like to have in 2 or 3 years 3 grand
Hmm.
off of that? That one
Hmm.
bottle could be 3 grand. I mean,
Right.
there's so much this I was mentioning in the pre-show on Instagram. I remember when the stock market hit 10,000. I remember that because it was such a big deal. Oh my God, the stock market's at 10,000. It was at 34,000 points today.
Mm.
Like I graduated from high school in 94, and that was right around when it hit 10,000. To think that today it was at 34,000. So if you don't think that your stock market is a good investment or you're going to get a return, wealthy, super wealthy people put their money there, folks.
Yeah.
They don't
Mm.
lose. They won't lose. You're not playing at their level, but you will get your money back.
And I got to add to that that you
Please.
nailed it. Is there most people in the world building their wealth is through the stock market. The one mistake that people make is they want to enter the market but also think about exiting, and that's not what you want to think about, because I will say this: every pullback in the market, whether it's the dot-com bubble or the 2008 recession or COVID, they're always shorter than we think. They're always shorter. So when the market goes down, remember this: it's always going to recover faster than you think. The media, the news, everybody will say differently. They're like, this is going to sustain until the end of time. That's never true. You hold and you have the discipline. Like everybody out there who's a multi-billionaire is they're buying, they're holding, and they ride that roller coaster out. Let it go down, because guess what? It's going to go right back up.
Absolutely. I had a teacher that told me that. I had a teacher in high school that told me, like,
Mhm.
just hold on. And John's been riding with it. Everyone should look at setting up
Roth,
a
yes,
Roth IRA.
I have.
I,
I have one. Yeah.
you know what? It's funny you say that, John, and we're gonna get ready to close up the bar here in a minute. But
Mhm.
even my wealth manager, we talked when I moved my 401k from when I was in the railroad and we moved it over. He was like, we really need to put this into a Roth. I had it in a traditional 401k, which is taxed when you pull the money out.
Right.
He was like, you need to put it in a Roth and start investing in that. I'm like, explain it. He's like, when are your taxes going to be lower? Today or
Hmm.
in 20 years? I'm like, well, obviously today, Uncle Sam is going to keep robbing me as much as he can.
Right.
And he's like, that's why you put your money there. So even then we've slowly but surely been trying to transfer that money over a little at a time so that we can get it into the Roth. But I'm cautious because the minute you transfer it, whatever you've got in there turns
Right.
into, oh, that was income you made this year. Let me get
Hmm.
my cut. Oh no. Oh no, no,
Right.
no.
I know
So
we're wrapping up here. I
yeah.
have my own TD Ameritrade account where I keep most of my funds, and I have a Roth IRA as well. As most of you guys know, or some of you may know, is you can only max it out. Like I'm going into that. I think it's what, 6K a year, $500 a
Yep.
month. Yeah. So I'm maxing that out. Same strategy, buying great businesses, right? But like I said, I'm paying taxes now because my tax bracket way down the road will be probably a lot higher, and
Be a
Uncle
different
Sam's getting a
bracket.
bigger cut. Yeah.
Yeah,
So
Uncle Sam's there.
yeah.
Yeah, Nate, we didn't get into food. Sean and I probably could have got into food. We always end up talking about food. We did
Like a
talk
good
about bourbon though.
steak.
Oh God, my wife and I went to a place in North Adams, Mass. Like the most remote, ridiculous. Like you would never
Probably got
imagine it.
seafood too.
Bro, I grew up in Baltimore. We could talk seafood all day long.
Mm,
But we're in North Adams, Mass is in the mountains. Like this is not. This isn't Massachusetts. Like this is part
it's
of the
not on
Appalachian Trail.
the
Oh
ocean.
no,
Okay.
and I got a prime rib that I bet you was a good inch and a half thick. Like it was monstrous. It was so
Now we're
like
talking.
it was good enough that my wife and I was like, yeah, we need to go back. And she just got cauliflower because she wasn't hungry. She's like, I'll get an appetizer. She got Parmesan, garlic butter, Parmesan, cauliflower. Wasn't that rice BS. It was like real cauliflower.
Sure.
And I tasted. So I was like, this is amazing. Even my prime rib. Normally, prime rib comes with horseradish sauce.
Hey, there we go.
This came with like you get in the Italian restaurants, you get the balsamic and vinaigrette. It came with a sauce like that to dip, which was so different. I was like, this is mind-boggling. This is ridiculous.
Now we're
there you go, Nathan. We talked food for a minute. So real quick, we snuck it in there. So real quick, folks, as we're getting ready to close up, and I'm going to put this link. You'll have the ticker.com will be a link inside the show profile. All the places you can find us. One of the other things we've got going on, and I need everyone to share this so everyone gets to see this, is we've got the big giveaway going on. So we've got an album from Punk is a Doornail going on. They're giving us a drumstick and it's a button, but I like it. I like buttons. I'm a button guy. We've got that. We've got 2 original pieces of sketch art that came from DCD Collects, which we've got at the end of the month. Drew's coming back on. We're going to talk about what the hot collectibles are. That's another investment. I love collectibles as an investment. You want to talk about a roller coaster ride? There's one that you've never like. That's a whole nother roller coaster ride. But Drew's coming on, and we got 2 original pieces of sketch art. Chris Hedberg, season 7 Forged in Fire champion, made us a bottle opener that's a dragon with a beard for the bottle opener because you got to have a beard. And the wild thing is here, hold on one second. I gotta, because it's right next to me, so I might as well grab it. Let me grab it. This is the part of this thing that blows my mind. I asked him, I was like, where did this thing come from? And it was originally a piece of square stock metal, just a piece of like bar square stock. And it's hard to tell. I don't know if you can see it. There you go.
I can see. Yep.
Those are all scales on it that he hand forged in the scales.
That's incredible.
And then you got the face.
That is impressive.
Like,
wow.
My man is a champion. And then it's got the tail, and the tail has move it over here. The tail has feathering in it that you can kind of see in the screen here.
I can see that. Yep.
For those of you that are going to listen to the audio, you got to go see the pictures on our Instagram, our Facebook pages. These are giveaways. They're free. I'm giving them away.
That's cool.
And then the last thing is we had Eli the B guy on, and we still got all the B t-shirts on TeePublic. Those B t-shirts, you buy a t-shirt, whatever I make off the B t-shirts, I'm giving those away. I'm giving that money to a bee charity to save the bees. But whoever wins this giveaway, we've got the Italian. Did you know there's an Italian bee? This blew my mind. This is, I don't know if I can figure out how to get this thing open here.
Your mic is, there
my
we
mic
go.
is in the way. Let's do this.
Yep, there you go.
We'll go this way.
Save the bees.
Save it a bees. Save it a bee. You gotta put the finger out there. Save it. My daughter drew that.
Save it a bees.
My daughter did the drawing so that the bee's little mandible. I guess is that what I don't know.
Mandibles. Yeah, sounds right.
It looks like it's pinching its fingers. But that's going to be on there also. So make sure you put your name in, you subscribe to all the spots that you can so that you get an opportunity to win, and you share that thing around. Now, as I told you before we started here, Sean, do not log off. We got to get ready here. If you want it to be a Christmas present, Nate, it could be a Christmas present. That's up to you. You got to make sure you go and subscribe. Before we get ready here to close up the bar for the night, as we always do on every show, the guest gets the last word. So what is the last word for tonight, Sean?
Start simple. Join ticker, tykr.com. No pressure, of course, 14-day free trial. But yeah, start with $100. Start small, start simple.
All righty, folks. Be sure to push your stool in.
This has been an Earplug Podcast presentation. Found on earplugpodcast.com, iTunes, SoundCloud, and wherever your favorite podcasts are found.